And the inflation rate is the exact same number as it was in March. That's important. I said we're going to see over 8% interest rates by the end of the year. All right, so all you trolls, if you are calculating your net worth based on your home's equity, those days are, you're going to be upset in the next 6 months. I personally believe we're at the very beginning of this.
Rich Dad Real Estate Advisor, best-selling author and direct manager of over $1 billion worth of real estate, Ken McElroy is about as high up the real estate expert food chain as one can get. While many experts are saying the Fed is about to pivot, central banks won't risk hurting the real estate market, and inflation will be under control soon and the property market will boom again, McElroy has a contrarian opinion. In this candid interview, he reveals his predictions and expectations over the next 6, 12, and 18 months for the US real estate market. If you're an investor, homeowner, or perhaps waiting on the sidelines to scoop up bargains after the crash, the essential highlights from this interview will help you solidify a plan of attack.
We had 4 rate increases since March. Guess what inflation was in March of 2022? 8.5. Guess what inflation is in July of 2022? 8.5. That's with 4 rate increases.
Right.
Okay. So now I know there's lag and there's things that have to happen, of course, and there's definitely lag, but there's lag both ways. There's no question that mortgage applications are way down. Mm-hmm. The refinance applications are 83% lower than 1 year ago. 83%.
Well, almost everybody refinanced.
Well, I don't know. There's a lot more equity run up that we had in the last year. So, so mortgage applications are at a 22-year low. They're 23% off, and refinance applications are 83% off. So that's what we call a clue. But the reality is we are going through a correction. We are definitely seeing price reductions. You can go on Zillow today and see price reductions. You and I have been watching this for a while now. So, and it's kind of fun to see a seller price reduction. It's pretty transparent. So, but not all markets have price reductions. So, there are still, you have to take a look at the whole picture. So you have to take a look at, is a market undersupplied in the beginning? In other words, does it need more housing? Number one. And you can't just blanket the whole country and say the whole country needs more housing, because that's not true. Is that area have population growth and job growth? And where are the migration patterns headed? So are people moving out? Are they moving in? All of those matter. And so all of that makes up the strength of a housing market. So, Phoenix, Arizona, Cleveland, Ohio, and Miami, Florida are very different markets.
McElroy goes on to explain his mortgage rate predictions for the end of the year. As we return to McElroy, share in the comments below if you think mortgage rates will go up or down by year's end. And if today's Essential Investing episode helped keep you informed, share the love by dropping a like, and subscribe and hit the bell so you get immediate notification of tomorrow's video, where legendary billionaire tech investor Chamath Palihapitiya reveals when he thinks the market will bottom and the asymmetric upside afterwards that could be the greatest investing environment of all time.
There's a difference between a correction and a crash. So now, by definition that I found, anything over 20% is considered a crash. Anything under 20% is considered a correction. Now, you might have your own definition and you might find another one, but that's the one I found. So regardless, the last crash we had was that, 2010, 2009, that time frame. They went, home prices went down 27%. I also think it's important to note that single family residential, when it's going up, it helps rentals. So high price of housing and high cost of mortgage due to high interest rates push people into rentals. So this is creating better affordability for people that need to buy homes and want to buy homes. And I really believe people should. And I'm in the rental business.
And so you're saying the price is dropping is helping
I'm saying
people.
That prices are dropping. It's already showing not in every market. And the problem is that people are going to defend their own little sub-market based on their limited information. The bigger issue, I think, is we've had 4 interest rate federal funds increases, 4, since March of 2022, and the inflation rate is the exact same number as it was in March. That's important. So there's 3 more this year. There's one in September, one in November, and one in December, when the Federal Reserve is meeting again. I believe that we're going to see more increases between now and the end of the year as the Federal Reserve tries to tie back to that 2%. It's all over the internet. Jerome Powell has made it clear that 2% is his target. And so there's a big gap there. So we've already seen a 22-year low. We've already seen 23% difference in mortgage applications. We've already seen an 83% reduction from a year ago in refinances. And hasn't even moved the needle on inflation. Just wait. The average mortgage payment has gone up $700 a month. Mm-hmm. That's a lot. Mm-hmm. So that's a significant issue for a lot of people. What that's doing is it's a couple things. It's keeping people in rental housing, which is not healthy for rental housing. It's creating affordability issues for people that should be buying a home and progressing, right? So it's not good. And so this is a correction. And that we were in a bubble as a result of cheap money, which is in the form of interest rates.
So do you feel like if they keep raising the interest rates, like you're predicting that they will, that it's going to lead to a crash, or do you think it's still a correction?
I'm right now saying it's a correction, and it is a correction. So the question is will it go above 20%? If that's your number. I don't know, and I think each market's going to be a little bit different. Could Boise technically crash? Could Boise, have a over 20% correction when Moody's is saying it's 72? Sure, it could. But then you got to look at other markets that are undersupplied. There's a lot of markets in Florida that are doing very well, in North Carolina and Atlanta and of course Southern California. And there are markets that are doing very well. But this goes back to the very basic principle that we talk a lot about on this channel, and that is cash flow versus capital gain. So if you bought something in Boise and it didn't cash flow, and it doesn't, you don't have a way for it to cash flow. You simply are buying it like a stock, and you hope that it goes up. This is your day of reckoning.
Right.
That's what this is. This happens every cycle. Between now and the end of the year, I really, really, truly believe that we're going to see a fairly significant increase in the federal funds rate over the next 3 meetings. And I think by the end of the year, we could be looking at pretty high. I think at one time, what did I say, Jerry? Did I say 8% mortgage? Yeah. Yes, I did. That was a couple months ago, wasn't it?
Yeah. I
said we're going to see over 8% interest rates by the end of the year. All right, so all you trolls, come on, come at me right now. If you were calculating your net worth based on your home's equity, those days are, you're going to be upset in the next 6 months to 1 year. There's no question. Your home equity is going to start to go down. I personally believe we're at the very beginning of this. I would wait and reassess this in the first quarter after the next 3 Federal Reserve meetings and see where interest rates are at the end of the year.
Thanks for watching today's Essential Investing episode. And if you want to hear Ray Dalio explain why the American empire is on the verge of collapse and how to profit from it, click this video right here.